Technical indicators don't work. At least that's what most people would say. That's not true, and I will prove it. The strategy we are exploring in this 10-episode series comes from Bill Williams. He's an American trader, author, and educator. He created several indicators, but we will focus on two of his most powerful tools, the Awesome Oscillator and the Alligator. As always, no market replay, no hindsight, and no cherry picking. This workshop trades the live markets, and we will trade the Bill Williams strategy across 10 episodes to see if it holds up. Let's find out. In this video, we will be using Awesome Oscillator and Alligator only. To enter and exit a trade, plan is to wait for a liquidity sweep at $975, and once the price closes and stabilizes below the Alligator in the 1-minute chart, we use the same range as a pullback to enter short position. Please note that with Alligator and Awesome Oscillator or Bill Williams strategy, we are not able to catch the high and the lows. This is a trend following strategy, meaning once the price takes the high, we have to wait for the price to close and stabilize below the alligators, and then you can use any of those lines in a pullback to start selling. In this video, you will see that in live action. Over here, you guys can see the price is respected the ellipse line, the green one, with this tail. Therefore, a new high is on the horizon. After the price crossed above the alligator, the teeth line and the jaw line also respected. We need the same scenario for the bearish leg if it occurs after taking this high or even getting close to it. The price is getting very close to the resistance. On the other hand, there is a negative divergence between Awesome Oscillator and the price. This adds value to our strategy. This is a bearish sign where Awesome Oscillator is not making a new high, but the price did near a key resistance level. Therefore, if the price doesn't take that, I won't be surprised. Either right now we already have a big bearish candle that's aggressive in the market. I talked about passive and aggressive markets. Now we have to wait for the price to close either below the red line and the jaw line. Since we have that divergence and the price is close to a very key resistance level, we can either use a close below the teeth line to enter short order. But for that reason, the contract size should be smaller. So over here, it should be somewhere around the lower price of this bullish candle. As for the stop, it should go above the green line. That would be around $50. As for the profit, for now, we can target these equal lows. The risk to reward in these strategy should be way higher, only because the Bill Williams strategy is a trend following strategy, and it doesn't provide much of opportunities from peaks or highs. The price had a significant drop. I would like to add more to my short position if it returns to either the green line or the red line. Therefore, over here, I would like to add one sell limit at $900. Profit remains the same. You round it up to $300. You might be wondering, not understanding this strategy with the first episode, but do not worry. I will do this multiple times, at least 10 episodes back to back. Let me explain again. We had a new high. That high was approaching a very key resistance level at $975. At the lows, we have a divergence between the price and Awesome Oscillator, where Awesome Oscillator did not make a new high. The price closed with speed below the teeth line, which is the red line. We entered one short contract. Below the green line, moved the stop above the lips. The reason I entered with rush in this trade is because the price came short to this major resistance. During the day, Nasdaq already had its rally, and based on experience, I was expecting the price to go past toward these liquidities. But as I said, don't worry, we will have more and more episodes and examples like this. I left one pending order near the red or green line, but they were not activated. The market was very bearish and it started ripping lower, and now it is very near these lows. The profit is taken. Entry was here. We risked $50 to get $300. That's 600% return of the stop loss. I hope you guys like this episode. I will see you in the next one. Until then, stay safe, stay observant, and always protect your capital with stop loss.